Good morning, good afternoon, good evening, traders from across the globe, and welcome to the 1180th edition of Short-Term Trading Live with Oscar Carboni, and that would be me. Good evening, traders. Welcome, welcome, welcome. Again, the 1180th edition of Short-Term Trading Live with Oscar. These are videos that are geared to teach you the art of technical analysis and how to apply that art moving forward. So in most cases, these are short-term videos geared for the very next day, maybe 2 days moving forward, and then we're on to the next video. So what I wanted to say before I get started with anything else is, of course, futures trading can be extremely risky and can cause substantial financial loss. Futures trading, as we know, is not suitable for all trading accounts. All right, traders, so what's going on? For trading on Thursday, that would be May 29, 2014, let me just step back to video 1179. This is the scene I put in my video just a couple of nights ago, Monday night on the holiday. I did a video on the holiday for you, and I said, traders, here's a gold chart. This is a daily bar. It is below the 200 bar moving average, as you can clearly see. And I said, boy, oh boy, this is a very big pennant, and I think it's going to crack. So I showed you this very chart in my last video, 1179. So this is where we were the day I showed you that video, the day I showed you the chart. Let's add in the action that has taken place since and see what's transpired. Oh my goodness, look at that move, traders. What more could you ask for? That was picture perfect. Ring the bell on that one. And believe it or not, thank the Lord, our OMNI was short for just about the whole move. So that is absolutely what took place. Being below the 200 bar, the big pennant, that was good analysis. Away we go. So the call for gold worked out very well. So that's what happened from Monday night until just last night. Now we want to go forward. What's going to happen on Thursday, Oscar? Well, that's what we're here for, right? So let's move forward. The next chart I want to show you is the Russell. Traders, in the Russell, we've got a pattern. The Russell, and if you ask me, and if you've been following me long enough, a pattern is a pattern until it stops. In other words, we do not discount a pattern that we see repetitive. We just think it will repeat until it stops repeating. So what do we have? We've got the OTAPMA, the Omni Trading Academy's proprietary moving average, right? This purple average. When the market was above it, it would come down to it, hit it, and bounce out, as you can see illustrated by the arrows and, of course, the yellow bars. Then we got down below it one day. But bam, we came down below it, we got up to it, and dumped. Got back up to it, hit it, and dumped. Now we've got back up to it, and each time we dump, you hit it for 2 days, and the dump comes, right? Hit it for 2 days, the dump comes. We've hit it for 2 days, the dump is supposed to come. That's a pattern. And a pattern is a pattern until it stops. So I think this question mark will turn into not a question mark, just these arrows will be left there with a down day. Now that's what should happen, and traders, we are creatures of repetitive patterns. This is how we survive. Technical analysis is fantastic as long as you can spot the patterns that the indicators and the rest of the analysis is pointing you towards. So that's my job. When the Omni gives us an arrow, which is pointing red for trading indices on Thursday, it's my job to hunt it down and find out why. So this is absolutely one of the reasons why we will be looking at selling the rallies in U.S. indices for trading on Thursday. Then you've got the Dow Jones Transportation Average. Traders, look at this one, a very, very interesting chart I'm about to show you. The Dow Jones Transportation Average has been the leader and has been running higher and higher, right? We won't take that away from it. Granted, that's the way it works. So let's re-examine that. If we look at this chart, we say, okay, after it has a pullback, whatever pullback it has a certain amount of days up, and then it stops. Well, after this down day, it had 4 days up. 1, 2, 3, 4, and then you came off. Then the next time you had a down day, you had a down move, you had 1, 2, 3 days, and then it came off. And the next time you went up for 4 days, note the yellow bars, and then you came off. Then we went up, after coming off, we went up for 4 days, and then we came off. Then we had a nice big sell-off, and we went up for 6 days, which makes sense because the steepness of this sell-off gave you just a little bit more power on the way back. So this time it went up for 6 days, but then it goes right back into its usual pattern. It comes off, it goes up for only 3 days. So you see it's 4, 3. Next time it goes up 1, 2, 3, 4. We get 5 days out of it. Wow. So the biggest you ever got was 6 days, but that was after a big spill-off. So, the average is between 4 and 6, right? The average right here is 5, obviously. Well, we went up, as I just showed you, 5 days before the last pullback. Look, count the days. 1, 2, 3, 4, 5 as of Wednesday. Thursday should start higher and come off according to the repetitive pattern. And traders, you've heard me say this to you dozens and dozens of times in many and many of my videos. And I always tell you this, a chart, this chart right here, a chart, when you look at a chart, it is merely a visual look at all the fundamental data and all the news that's ever come out, and our traders, us traders, the traders' reaction to such. A chart is a visual look at all of the news and traders' reaction to such. If you know how to read the chart, you know how to read the news. Charts usually have repetitive patterns, and this is one of them. So the repetitive pattern I showed you in the Russell, combined with the repetitive pattern we just went over, combined with the red Omni, tells us we are selling rallies in the U.S. indices for trading on Thursday. Traders, I hope these videos are helping to keep you in tune with the markets and how to trade them moving forward each day. The last video had really, really hard, perfect analysis in it. Hardcore, right on time, perfect analysis. Maybe this one will too. Analysis never works 100% of the time. But if you use it consistently, you will find out that you will find consistency in your approach. Traders, come on down to livewithoscar.com. Join me in my free trading room. And always remember, keep your emotions out of trading. One of the best things I can offer to you is to tell you to say this to yourselves every morning, every afternoon, every evening, and especially when you're in a trade and you know what that is. Stops are in. Emotions are out. Traders, thank you so much for coming down to livewithoscar.com, and I will see you in my free chat room.